Hi guys, and welcome to this week's edition of our weekly forecast. And this week I decided to do the video on Monday for some reasons which I'll let you guys know a bit later. So let's get into it. So last week we saw dollar losing huge amount of value, especially on Friday. The dollar fell to the downside. The dollar was very weak. Now there's a few contributing factors to all this, mainly the NFP number, Yellen not being firm regarding inflation, and also Biden's spending. So there's now a whole lot of question surrounding how is that money gonna get paid, who's gonna pay for that stimulus that Biden keeps on unveiling. So looking at this week, like what the market is mainly, or what can I say, or what I expect the market to do in this coming week, nothing much different from what we saw the previous week. I still expect dollar to drop a bit further to the downside, probably heading into 89.80, which is now our rejection zone. Right now price is trading right at the 50% mean threshold of our monthly order block, the gray shaded area. That's where price is, and you can see price has struggled today to either trade away to the downside or trade away to the upside from the 90.250 institutional price. So now, what then is causing that? Why was it so difficult for those bears that we saw Thursday and Friday to keep continuing with the down move? You can see here, when you look to the left of the chart, yes, and I'm on a daily, we've got a vacuum here, vacuum block imbalance in the market, which created demand, right? So we are bound to see price finding support at that 50% mean threshold of the monthly bullish order block. This gray shaded area, this is our monthly bullish order block. So price is bound to find support, because now we are in premium. Let me just zoom out a bit so you can see from this swing low to this swing high. If we place our fibs there up until this high, we are back in premium range. Price is playing around the 90.0 price point, which is our 79% retracement zone. All right, price rallied away, there was a retracement back into the 90, which is an area which provides what? Support. It's a premium range. So if you are to look to trade dollar in this week, right, long trades are ideal, but you need to have the fundamentals that are going to support bullishness on the side of dollar. We need to have a bit of news, something that comes out that will help the dollar to regain a bit of the losses that happened last week. So now, with us having looked at this chart, this is our daily chart and price is right in premium. I'm gonna go to my COT report. Right, we've already captured the US dollar index futures positions. We did this in class on Saturday, and this is the report from the 4th of May. So we can literally see the non-commercials, the hedge funds, the banks, and the institutions. Remember, don't turn like a total blind eye on these guys. The banks, the institutions, the hedge funds, they're in the business of money. And for these guys to lose money, it's not something that they would really want. So we must always keep an eye, especially on what they are doing. So we can see here the non-commercials, they decreased their long exposure on dollar from 23,800 to 22,000. They also decreased their short exposure, right? But if we look at the overall long and short exposure, they actually increased their short exposure, right? Now the non-commercials, they increased their long exposure by a couple of 100 positions, but they decreased their short exposure, which is crucial. Open interest didn't jump that much, jumped by a couple of plus minus 2,400 points. But here it's crucial to note that the commercials, they keep on adding their long exposure. As from the 13th of April, their long exposure on dollar is increasing and their short exposure on dollar is decreasing. So now when we come to the chart, why is it we don't have any bullishness coming in dollar? We had one here 2 weeks ago. Dollar did rally but found resistance in discount. This fair value gap here and liquidity void. Price found resistance for how many days? Like 1, 2, 3, 4, 5, 6, 7, 8 trading days. Price was finding resistance on 91.33, which was a premium level. Now we are back in discount, right? We're in discount right now, not premium. We're in discount, an area where we'll be hunting for long trades. So now with this report, like I said, from now on, the weekly forecast is going to include the COT report data, so that everything is in conjunction together, not that I have two separate videos. So with these numbers that we see on the commercials, I would expect dollar to find support alongside the price of 90. I would expect dollar to struggle a bit to break to the downside, right? Reason being that this is our monthly. If I go to a monthly chart, you can see this is a level of support. We're in discount, right? An area where we could expect dollar to rally to the upside. So now with the Saturday class, we also talked about high probability swing trade setups in buy models. The setup that we have here is a high probability swing trade to the upside, because if you go long here, you expect to have your stop loss below 89 price point or all the way below 88. That is a swing trade which you are looking to take for dollar to go back all the way to 94, right? So now with the number that we saw on the COT report, I'm expecting dollar to find a bit of support, meaning I'll be hunting for long trades. Yes, dollar is weak, we cannot deny that, but there comes a time when you as a trader, you have to make that decision of getting into the market, whether it's at the right time or not yet. But right now I think it's ideal to be hunting for long trades with an initial target set around 90.80. So now coming back to the COT report, I'm going to go to the euro section. We have already captured the euro numbers. The non-commercials, they increased also their long exposure, they increased their short exposure. The commercial side, they've reduced their long exposure on euro futures and they've increased their short exposure. As we can see on the commercial side, euro, they've been increasing their shorts since the 6th of April. Shorts have been increased, but we literally didn't see much of pressure coming into euro USD. we saw euro coming under pressure in euro CAD, euro CHF. I'm still holding a short position here on euro CHF. You see, now that is already a swing position because it's almost 2 weeks now I've been holding that trade. So euro CAD, we have seen euro coming under pressure. Euro AUD, not much. Euro is holding its ground against the Australian dollar, but against the CAD, against the Swiss franc, euro has lost huge ground. Now, why is euro against dollar not also being subjected to pressure? Why is that? Dollar is losing value, so you expect euro to gain. Yes, euro did fall on the 30th of April. That was 2 weeks ago. Euro did drop to the downside, a couple of 140 pips, but it found support in discount and then traded to the upside. But now with the commercials increasing their short exposure and with open interest jumping by about 5,000 points, I'm expecting euro USD to find resistance. As you can see, this gray shaded area is our monthly bearish order block on euro. If we go here, this is the order block that I'm talking about. So we are in that range. As you can see, today we tested the opening price of the monthly bullish order block, and price found resistance and it dropped about 40 pips to the downside, right? That would have been a nice trade to the downside if you were looking for short trades on euro USD. But as the week goes by, I'm expecting price to drop from this premium range. We've already filled the fair value gap, as you can see there. This is our fair value gap from this low to this high. We had a fair value gap, price filled, cleared the buy stops. So I expect price to turn a bit bearish to the downside in this week. Now I'm going to capture the COT data for British pound and gold, and then I'm gonna go to the charts and see how we can link up those two reports to the charts. So let me go to the CFTC website, commitment of traders, and then the usual, we go to the legacy reports. And for British pound, we come to the Chicago Mercantile. We need the short format. Chicago Mercantile Exchange, we need the short format. I'm gonna press Ctrl F. I need pound, so this is the pound. Just zoom in a bit. So we've got the British pound futures only position as of the 4th of May. Right, so we come here. So we have 4th of May, that was last week, Tuesday's release. And then the non-commercials, they are holding 52,262, 52,262. They've taken profit on their longs, and the shorts, they're holding 32,414. 32,414. They've increased their short exposure. Now coming to the commercials, we can see that the commercials, their long exposure is sitting at 59,055. 59,055. They've taken profit on their long exposure because they have reduced their long exposure, and their short exposure is sitting at 97,048. 97,048. They've also taken profit on their shorts. And then open interest is sitting at 152,741. 152,741. Right, let's see what open interest is. That's a huge jump in open interest, so we are bound to see a very explosive move on the pound. Right, to which side now? So the commercials, they reduced their short exposure from 108 to 97. They've taken profits on their shorts. And then the long positions, they've also taken profit, but not by much. So they are literally leaning to the down. If they are taking profit on their shorts, they are leaning to the upside, the commercials. And the non-commercials, they've increased their short exposure, right? They've reduced their long by about 7,000, and they've increased their short exposure by 32. They've increased their short exposure by 32,000. So we can literally say here, price is bound to move to the upside a bit before it trades lower. Price is bound to move to the upside before we see pound trading to the downside. Let's see. Okay, that's interesting now. That is interesting what's happening on the pound. So you can see what today's price action is. I've already sent a message on the group regarding this one to say, guys, take note of the daily close on the pound. Take note of the close. We are right back into this daily bearish order block. We are right back, and you can see there's market inefficiency there. Today's opening price and Friday's closing. We will revisit this area sometime soon, probably this week or in the coming week. So I'm definitely going to be hunting for short trades on pound from the current price zone. Current price zone, pound will definitely find resistance. We are in premium range 1.4173. There's buy stops above. We've got buy stops above here. Price trades above. That's our cue to be hunting for short trades. Yes, you can take a short from the current positions, current price, but make sure your stop is way above the rejection block, which is a bit much of a stretch in terms of your stop. So yeah, expect pound to find resistance now. We are in premium range, and we could see price facing huge resistance because of these two premium areas. We've already closed the fair value gap here. You can see where the fair value gap, we cleared the buy stops there. We had market inefficiency, price rallied. We could see a bit of weakness coming into pound USD and also pound yen. Pound yen, it exploded. This thing exploded. We cleared the fair value gap, cleared the premium range, took out the buy stops. Expect a bit of resistance right now. This guy will literally drop in the coming days. Same applies with pound dollar. Now we need to get the gold data from the COT report, and now that means we're going into legacy report, but the commodity exchange. Come to the commodity exchange, we need gold, right? So let me just copy the date. Right, so the non-commercials on gold, they are holding 270,194. 270,194. Yo, they didn't move much. They've only taken profit of about 600 positions, and the short positions, they're holding 99,453. 99,453. They've also taken profit on their short exposure, so they've taken profit on both sides, but more on so this is 99.43. Yeah, that's about 600. Also here about 500. So Not much of a move in terms of the non-commercials, but the commercial side, long exposure, they are holding 103,961. 103,961. They've increased their long exposure by a small margin, and short exposure they are holding 305,884. 305,884. They've reduced their short exposure. Then open interest on gold is sitting at 470,341. 470,341. That's a move of about 3,000, just under 3,000 points to the downside. Open interest has been reduced. And what does that mean? When open interest decreases, the commercials, they are reducing their net short positions. So now we come to gold, and you can see gold trading into this bearish order block here, right? Which was almost like the target. Remember, if you're in the mentorship group, the sell stops here, down here, the ones I say hello there, I told you guys, once we clear those sell stops, it opens up a gap to move all the way to 1800 and above. Yes, I wasn't expecting price to go all the way to 1830 or 1835, but that's the end result. So expect a bit of resistance to come on gold, right? Current price action, you can see we've got market inefficiency there. We've got a vacuum. Today's opening price and Friday's closing, there's a vacuum in price. Where are we? Where's today's opening price? Control Y. Right, there we go. We've got a vacuum here inside this range here. There's a vacuum in price action. That's market inefficiency. That could be an ideal area to load long position, targeting the buy stops above this range here. These two equal highs here, they could provide liquidity for market to rally to. So we got the 04, just highlighting the price zones, guys. So we have buy stops above there, which could be a target for buy stops. There. I'd expect gold to at least have a sniff of those buy stops, and you can see these two equal highs and this low. We have a fair value gap. So yeah, gold, we are looking to trade to the upside a bit right now, and you can see the non-commercials, they've added their long and they've taken a huge chunk of profit on their shorts. So long positions are ideal on gold. From which zone now? You need price to trade into discount. Number one, the vacuum is going to help you with that. Number two, you've got price, today's low, right? That's today's low. Let me just highlight that for you guys. 29, today's low and Thursday's high. Today's low and Thursday's high. You can see we've got a liquidity void, fair value gap. So anticipate price to trade into this area and find support before another leg push to the upside, or it can trade all the way to 1800, right? This is our monthly fair value gap, which price broke through here on Thursday. So expect these two areas, number one here, number two there, to provide support. That's our discount range for another move all the way to 1900. So yeah, that's pretty much about it for today, guys, and I hope you have seen how I link the COT report to what the chart is telling me. But remember, you must always keep in mind of the fundamentals, what's going on in terms of the stimulus, the interest rates, the inflation rumors. Personally, I think it's not a rumor anymore now. When it comes to inflation, something is going to really happen regarding inflation. Whether they're gonna cut back their forecast to say they'll only look at increasing the rates in 2023, that's another story, but they might need to increase the rates now, because things might get a bit out of hand. So yeah, this is what I wanted to share with you guys regarding the weekly forecast and what we anticipate the market to do. So for today, make sure you take note of our pound dollar clauses, and also take note of the momentum on Euro USD, because we seem to have like momentum is dying because of the resistance. There's no more push to the upside, so expect the price to drop. So there is good setups in the market. You just need to know exactly when to go in and when to get out. So yeah, that's pretty much about it for today, guys. I wish you guys good luck and happy trading. Thank you.